Well, the local market maintained its four-day winning streak with financial stocks leading the way. I spoke to McCarthy from CMC Markets a little earlier. McCarthy, the positive mood seems to be holding today.
Yes, another good performance from the Australian share market today. It rose by more than 0.5%, the ASX 200 index finishing at 4,269. And not only is that good news for investors, that's the fourth day in a row that the Australian share market has risen, and that's the first time this year we've been able to say that.
It's also the end of another choppy trading month. Take us through some of the winners and losers.
Well, it was a very choppy month and a very different experience for different sectors. Overall, the Australia 200 index finished up by just over 4% today for the month, a very solid performance. But within that performance, there was very contrasting fortunes. The two largest sectors on our market, the financial sector and the resource sector or materials sector, had very different months, with banking and finance buffering that financial sector, making it one of the best performers over the course of the month, up more than 6%. In resources, however, the concerns that we've seen about global demand and the global situation has really weighed on the sector. And despite the overall market rise, the resources sector was actually down by 1% over the same month.
To some of the stock specifics, and Origin Energy had its latest production figures out. What did the market make of them?
Well, the market appeared to be very pleased. Its share price rocketed higher early and was up by more than 13% at one stage during trading today. We did see a revision upward of coal seam gas reserves by 11%, a very significant jump, and that saw the trading in Origin shares being very active all day. The shares still managed to put in an 11 cent or 5.5% rise on the day, finishing above $2.20.
And I see Aquila Resources has got environmental approval for its proposed iron ore port.
Yes, and the market took this also as very good news. Today they also announced that they'd missed out on a space in the Bowen Basin servicing port where they've been bidding, the Wiggins terminal. However, the market focused much more on those West Australian iron ore operations. Its shares were also up very solidly, closing up by more than 5%.
And rumours swirling about the carve-up of Echo Entertainment. But surely there are serious issues, both practical and legal, of what is apparently being discussed behind closed doors.
Yes, we saw some reports this morning questioning the legality of a joint venture between the two main contenders for the Echo shares. That is the Genting Group out of Singapore and the Crown Group out of Australia. Now, there has been some talk that they might get together to jointly develop the Echo business if they were successful in getting control of it. And those reports this morning rightly question the idea that they could act in concert. If they did, they'd be considered a single entity and be restricted in the level of shareholding without launching a bid. There are also questions raised about the main plan that seems to be driving Crown's desire for Echo, and that is the idea of splitting the Sydney licence between two different venues. And the market focused in on that. On a day when most shares were high and every sector finished in the green, Crown shares actually finished down 2 cents.
McCarthy, thank you for joining us.
Thank you.